Why don't you chime in? Where do you think the most value is in this market? Take your pick across assets.
Yeah, so, well, I'm an equity strategist, so I definitely look at the sectors a lot more. I'd say that in terms of sectors, we definitely prefer the internet sector and the food and beverage sector. And the internet sector in particular is one we like, where we're seeing the companies reporting decent earnings. We are seeing a COVID resurgence, and these companies do benefit from more online consumption. And in the second quarter results, even though there was a Shanghai lockdown, some of the companies were actually seeing earnings upgrades and decent earnings reports. And we are also seeing an improvement in the competitive dynamics in the sector. And it seems like we are at the tail end of the regulatory cycle for the internet sector. And also we see a bit of good news on the ADR front. Food and beverage is more on the commodity declining front. These companies do have good pricing power. Many of them have started raising prices in the first half of this year. Some of them, we are seeing ASP increases. And so we do expect for some of them a margin expansion in the second half, which underpin their earnings growth in the second half. So food and beverage.
James, maybe help us take a look at earnings so far. I mean, do you think that we've seen the worst of these kind of COVID lockdowns and the impact it could have on earnings? What's your take?
Yeah, so I'd say that, so currently consensus forecasting around about 8% earnings growth for MSCI China. We're at 5%. So we do see a little bit more earnings downside for the market. That said, I think one thing to highlight is we look at the second quarter results. Many companies have actually seen earnings cuts. We're seeing earnings cuts of around about 3 to 4% for companies that reported. And yet share price really haven't responded. So that suggests to me that while the sell side is come downgrade, the buy side is ahead of the sell side. The buy side probably a bit more pessimistic compared to consensus.
Right, and I would imagine, the buy side also has to contend with not just fundamentally what's happening in China, with what's happening in the rates environment outside there. So how do I sort of reconcile the two, that it is not an environment that is conducive really to taking a lot of equity exposure at this point, James?
Yeah, so I'd say, so in terms of our view on the equity market, yes, in the short term, I'd say that we're generally a bit cautious given the COVID resurgence. We also see a bit of deterioration in the US-China relations. That's generally not good for China markets. We're also, come up downgrades on a lot of the companies. That said, over a 12-month period, we can still see that the fiscal and monetary policies are quite supportive in China, but very divergent trend compared to the rest of the world. And valuations also undemanding. If you look at MSCI China, it's trading at 1 standard deviation below the historical average. And we're also hopeful, like a lot of the investors, that we may see some normalization or relaxation in the COVID policies in the 12-month period. And that presents significant earnings upsides to the market that other markets might not have. So that's why we're still positive over a 12-month view. Yeah.
Right. Yeah, but James, I could have made the same exact argument 12 months ago, those same exact things, and look where we are.
Yeah, it's a difficult one right now. So I'd say, and that's why I think, next 2 to 3 months, I think the market's just going to tread water until they see a clearer sign, particularly on the COVID front. I think COVID is probably the major detractor to the market right now. So I think just wait until post the 20th Party Congress and see whether there's any change in the COVID policy. I think that's what the market's probably waiting for.
What are you looking for specifically at a party? It's beyond just the COVID zero. If we in fact see any kind of loosening and restrictions there, is there anything that really is a game changer for you that could maybe change your strategy in any way, James?
Yeah, I'd say that, first of all, if we look at the vaccination rates for the elderly, that's still, particularly those over 80, we're talking about 40% that have had 3 jabs. So right now, it's probably not enough for a normalization in the COVID policy. I'd say another one is maybe a change to the way that the government deals with the COVID resurgence, encouraging more people to vaccinate rather than just testing. So these two are probably the signs that we'd be looking for.